Imagine waking up one day to discover that $37 trillion in debt has simply vanished. There are no news alerts, no congressional hearings, and no economic panic. It sounds impossible, yet this is exactly the kind of financial maneuver quietly taking place behind the scenes in the United States. Over decades, the U.S. has accumulated a debt of unimaginable proportions, owed to both domestic and international creditors, while funding programs ranging from defense and social security to healthcare and infrastructure. Traditional methods like tax increases or drastic spending cuts are politically dangerous and economically risky, leaving the government searching for subtler solutions. What the U.S. has found is a sophisticated, hidden approach that blends the modern innovation of cryptocurrency with the timeless security of gold, quietly chipping away at its staggering debt while the public remains largely unaware. Cryptocurrency, once dismissed as a fringe asset, has emerged as a serious financial instrument capable of transforming traditional debt management. Digital currencies like Bitcoin and Ethereum have grown from speculative tools into recognized stores of value and mediums of exchange. By tokenizing portions of its debt into crypto-backed assets, the government can manage and trade these obligations in global markets with efficiency and discretion. Tokenization allows complex debt instruments to be converted into smaller, tradable digital tokens that represent fractional ownership of bonds or government obligations. This method enables the U.S. to move massive amounts of debt through global markets without public scrutiny, and the decentralized nature of blockchain networks ensures that these transactions can occur outside traditional banking channels. Some cryptocurrencies are designed to be deflationary, countering the inflationary pressures that often accompany conventional debt strategies, thereby preserving the purchasing power of the government and subtly reducing the real value of debt over time. The increasing adoption of cryptocurrency across the globe provides liquidity, enabling the U.S. to quietly settle obligations in digital markets, converting crypto holdings into cash or other assets seamlessly and without alarming investors or the public. Meanwhile, gold continues to serve as an enduring anchor in the government's debt management strategy. Beyond simply storing wealth, gold is being leveraged to restructure obligations, attract institutional investment, and influence global financial markets. By issuing gold-backed securities, the government provides investors with confidence while retiring or restructuring portions of debt discreetly. Gold reserves can also be strategically leveraged internationally to secure favorable loans or settle obligations, allowing the U.S. to reduce domestic fiscal strain while avoiding public controversy. Even subtle manipulations of gold holdings and trading patterns can influence global markets and the valuation of the U.S. dollar, indirectly easing the debt burden without triggering public concern. The synergy of cryptocurrency and gold allows for hybrid financial instruments that maximize both security and flexibility. Debt restructured into assets combining digital tokens and gold-backed securities can be traded globally, offering liquidity, discretion, and long-term value preservation simultaneously. By managing both digital and precious asset markets, the U.S. gains leverage to influence global financial conditions, smoothing debt repayments and maintaining economic stability while remaining largely invisible to the general public. This approach is designed to operate over decades, gradually eroding the $37 trillion debt load without generating the alarms typically associated with massive government borrowing or austerity measures. For everyday Americans, these operations are almost entirely invisible. Taxes remain stable, inflation is managed, and markets continue to function smoothly. Yet, behind the scenes, these maneuvers have profound effects. The value of the dollar is preserved, investor confidence is maintained, and economic stability is reinforced. Despite its sophistication, this strategy is not without risks. Cryptocurrencies are notoriously volatile. Regulatory scrutiny could disrupt operations, and the secrecy inherent in these maneuvers raises ethical questions about transparency. Any misstep could ripple across global markets or undermine public trust. Nevertheless, history demonstrates that unconventional, discrete debt management is nothing new. Ancient empires devalued coins to reduce obligations. European monarchies used complex financial instruments to handle war debts. And even the United States in the 20th century employed gold-backed currency adjustments to stabilize debt and maintain investor confidence. The current strategy is simply a modern evolution of these time-tested practices, applying digital innovation alongside traditional assets. Consider a hypothetical scenario where $1 trillion of U.S. debt is converted into tokenized assets and introduced into global cryptocurrency markets. Investors perceive these tokens as high value and secure due to partial backing by gold reserves. Proceeds from these transactions are then used to retire government bonds gradually. Concurrently, gold-backed securities attract institutional investment worldwide, further boosting liquidity and market confidence. Over decades, repeating this process allows the U.S. to incrementally reduce trillions in debt without the public ever noticing. These maneuvers also have far-reaching global implications. By quietly influencing the values of gold and cryptocurrency markets, the U.S. can maintain the dominance of the dollar, indirectly control interest rates, and preserve its position as a global financial leader. Nations, corporations, and individual investors may remain unaware of the precise mechanisms, yet they experience the results in stable currency valuations and predictable market behavior. While these strategies unfold out of public view, they have tangible benefits for citizens. Retirement accounts and personal investments benefit from stability. Inflation is kept under control, and economic shocks are less likely. Understanding these hidden forces can also inform savvy investment decisions, offering insight into the future movement of digital and traditional assets. The combination of cryptocurrency and gold represents a forward-looking strategy that is quietly reshaping national debt management. Digital assets provide flexibility, speed, and discretion, while gold provides stability, value preservation, and global leverage. Together, they enable the U.S. to gradually dismantle a debt load that would otherwise seem insurmountable, all without alarming the public or triggering economic instability. The quiet revolution taking place in U.S. financial policy illustrates how governments can harness innovation and historical practices to solve contemporary problems. Through the clever orchestration of modern and traditional assets, the U.S. is reducing its $37 trillion debt, stabilizing the domestic economy, and maintaining global influence, all while flying under the radar of public awareness. Understanding these hidden mechanisms is essential for anyone interested in finance, investment, or global economics, because the most impactful decisions are often those that happen out of sight. By recognizing the interplay between cryptocurrency, gold, and national debt management, individuals can gain a clearer picture of how power operates in the modern financial world. It is a story of innovation, strategy, and subtlety, showing that the management of wealth and obligations has evolved far beyond what most people see in the news or experience in their daily lives. The United States is quietly demonstrating that the future of debt reduction does not have to be loud or visible to be effective, and that mastery of both digital and traditional assets can achieve outcomes that were once thought impossible. While most citizens focus on obvious economic headlines, the real transformation occurs quietly behind closed doors, in the interplay of cryptocurrency markets, gold reserves, and strategic financial engineering. This is the hidden story of how one of the world's largest economies is managing to reduce an almost incomprehensible debt load without causing panic or public scrutiny. The combination of foresight, historical precedent, and modern technology allows the U.S. to accomplish what would have been unthinkable in previous generations: a gradual, controlled, and largely invisible reduction of national debt, all while maintaining economic stability and preserving global influence. This is a narrative that demonstrates the immense power of strategic thinking, the utility of both old and new assets, and the subtlety with which financial decisions can shape the world around us. By observing these hidden strategies, one can appreciate that the story of money and debt is far more complex and nuanced than it appears, and that the forces that shape economies often operate quietly, invisibly, and with extraordinary impact, making it clear that the future of finance is as much about secrecy and innovation as it is about public policy and visible markets.